This is probably for most of you a rather obscure topic, the international monetary system, and I hope I can make it interesting enough for you that you'll be convinced that it is probably one of the most important issues to affect what you do and more generally international trade, payments, and investment. And the topic sort of goes on and off. What is the importance of the dollar? Why is that a problem for the rest of the world? What are the problems tied to it? Are we living in a world where the dollar will play a lesser role, and what could be the consequences thereof? These are the questions that I will try to address. I will do a little bit a tour back in time, because a lot of the questions have been addressed in the past. A lot of the problems have been detected in the past, and a lot of the solutions as well were proposed in the past. And future solutions are very unlikely to be quite different from what they were 20, 40 years ago, which is, I think, part of the story I will try to tell. There are some currencies that are more important than others, clearly. But this is not necessarily a relationship that is static. It's probably, or it could become increasingly dynamic, hence the motivation of this presentation. The other aspect is this exorbitant privilege. And this is a notion that was coined in the 60s, and it has a lot to do about the advantages the US draws out of using the dollar as the main international currency, making the US a very different country from all other countries, not being bound by the fact that it can disregard what is called an external payments constraint. It can run huge deficits, and yet will always find someone who will buy dollars and therefore finance its deficits. It's a fantastic privilege, and hence the exorbitant privilege. For any financial transaction or for any international transaction, be it trade, be it a current transaction, a capital transaction, you need international media, mostly the dollar, in order to settle those transactions. And how the distribution of these dollars occurs has a lot to do on how many transactions countries can perform. If that distribution is skewed, some countries suffer, and then we'll have a lot of exchange rate volatility, as liquidity is not sufficient to accommodate all international transactions. So the structure of the presentation is as follows. I'd like to first of all give you a few facts about what are we talking about when we say the system has problems, or that we want reforming the system. And I give you a few facts about that in light of the external imbalances that we currently can observe. And then I will highlight the idea of international monetary cooperation, because the problem is that the world is not in sync, and that has to do a lot with divergence of economies and of economic policies. And the lack of monetary cooperation, the willingness, therefore, is a big problem. And in the past, we've tried to address it, and yet today we have very little appetite for that sort of cooperation. And I will go back to sort of two instances in history to sort of explain to you what was the motivation for cooperation in the first place, and that these remain as valid today than they were then at the time. Then briefly talk about the exorbitant privilege and why this has triggered repeated calls for reforming the system, basically making the world less dependent on the dollar. Are we looking at a system that is much more multipolar? Are we looking at a system where there will be new national currencies, or maybe other forms of currencies like the IMF SDR, like cryptocurrencies, or like truly international currency? To start off, what is the problem really of the world economy? And it's this chart, and I'm sure you have seen it 100 times, of course. These are the aggregate current account imbalances in the world economy, meaning there are some countries running huge deficits and other countries running huge surpluses. And the idea is, and that's the motivation for the talk, this is not supposed to happen. Why? Because large imbalances could mean abrupt payments adjustment, and that is coupled with high exchange rate volatility, and that has an adverse economic cost. So we had looked at the flows, we look at the stocks, and then we have the exchange rate volatility, which is the outcome of these imbalances. And I think if you think about fundamentally the international economy, the world economy, emerging markets represent about 44% of world output in nominal dollar terms, and their currency play absolutely no role in international transactions. That's a fundamental problem. Okay? And it is really the idea that there should be some convergence between the real economy and the monetary economy over time. because it's completely abnormal that a country like China in particular, the second largest economy in the world, doesn't have its own currency to play a role in international transactions.